This is Gerardo Del Real with Resource Stock Digest. Joining me today is the Executive Chairman of Prophecy Development, Mr. John Lee. John, how are you today?
I'm doing fine, sir. Good morning.
Good morning, John. Listen, it's been a couple of months since you and I chatted, and it's been a very busy couple of months. Let's start with the most recent news. You just announced a very positive PEA for the Gibellini Vanadium Project. The numbers, if we can go in detail, the internal rate of return is 50.8%. The net present value, and this is all after tax, mind you, $338.3 million using a 7% discount rate. A payback period of 1.72 years. Congratulations, John.
Oh, thank you very much. Yes, this has been busy, really, since we acquired the project, Gerardo. As you've been following the project closely, yes.
Let's backtrack a bit and provide a little bit of context for people that are new to the story, because I just read the numbers, and you still have a market cap of approximately 22 million Canadian. You're attempting to become the first primary vanadium mine in North America. You also, prior to this PEA earlier in the month, submitted a plan of operations for the project. Everything there looks on schedule. How are things coming along?
Oh, Gerardo, sounded like you do the project better than I do now. I think first of all, the announcement and the announcement of this preliminary economic assessment really put the project in a firm footing and established the project as undoubtedly the most important vanadium project in all of North America, both in terms of time to market and economic viability. You're looking at a project that's situated in Nevada, the best jurisdiction for mining investment in all of North America, with a capital expenditure of just about $100 million. Yet the project generates over $300 million in net present value at a very, very reasonable 7% discount, especially considering that it's in a political, safe, stable jurisdiction, Gerardo. So it's a combination of very high net present value, very high internal rate of return with less than payback of 1.72 years, and together with a very manageable capital expenditures. That's why the whole team here at Prophecy, as we sampled in the last few months, and a true all-star team, we all here believe that this is going to be a mine within 3 years, Gerardo.
I'm glad you touched on it being a mine within the next 3 years, because the other important point to note is that the life of mine is projected to be at least 13 and a half years. So this isn't a project that has a high internal rate of return, but is only good for 4 or 5 years. There's definitely scale here. And then the second point that I'd love for you to comment on is the sensitivity analysis. You've used pretty conservative parameters on the vanadium price. So can we talk about the plan moving forward to make this a mine? And then let's talk about that sensitivity analysis, because you're definitely leveraged to a rising price in vanadium. I'd love your take on that, John. You're one of the foremost experts on it.
Yes. Well, Gerardo, this PEA is called a preliminary economic assessment, but it's over 249 pages once we be filed with CDAR next week. And the details of this PEA highlights are available on Prophecy's website, prophecydev.com. And if you just allow me to quickly go through the numbers, you touched on a number of points. You're looking at an after-tax internal rate of return of over 50% and net present value at 7% discount over $340 million, a payback period of less than 1.72 years. And Gerardo, you're looking at an annual production of vanadium is 9.65 million pounds. It is significant. It would account for 15% of the ex-China, Russia, South Africa production. So outside those three jurisdictions, it will account for 15% of the ROW, the rest of the world. Including those three countries, it will constitute about 3.5% of the global production. We made the assumption, as we mentioned, a very conservative vanadium price of $12.70, even though vanadium price today is 10% higher than that at $14. The operating cost is $4.70 per pound of vanadium pentoxide, which is about 30% of the current vanadium price. What that means, Gerardo, is the project is probably the lowest quartile operating cost in terms of vanadium in the vanadium sector. What that means, we can withstand competitions, and we can stand the volatile nature of the metal commodity prices. So even if once the mining goes into production, even if the vanadium price were to go down 70%, which is inconceivable in our opinion, we could talk about later towards the end about my vanadium forecast, that the project is still manageable to be on a break-even basis. At a break-even price that includes capital costs and all in, the break-even is $7, just over $7 vanadium, which is 50% of the current vanadium price. So, Gerardo, I've been around the mining industry for almost 2 decades. Time goes by fast. Yeah. I've never seen a project with such a robust economics in a top jurisdiction in Nevada, in just top jurisdiction, lowest CapEx, lowest OpEx, just exceptional project, not just for vanadium, but for any project in general, period. It deploys very sort of bread and butter, truck and shovel, open mining operation, open pit mining operation, with a strip ratio, Gerardo, of less than 0.2 to 1. Literally, the entire hill is mineralized. There's no waste to remove. And the processing method is through the conventional direct heap leach process at atmospheric pressure and ambient room temperature without any beneficiation process. What I mean by that, we don't need to gravitate, separate, or magnetic separate. There's no high pressured container leaching, and there's no applications of high temperature either. So you're looking at really the very basic, lowest cost in terms of processing. The 13.5-year mine life, Gerardo, is only the tip of the iceberg. There are several targets within a 30 square kilometer of land, which we control 100%, that has shown very strong surface expressions, but yet to be drilled. So we believe that this is easily the most important vanadium mine because, as you mentioned earlier, that in North America, because we already submitted the plan of operation, we're 70% of the way in terms of permitting, and that the PEA demonstrated exceptional economics. So combined with accelerated permitting, time to market, and the project economics makes project really undoubtedly the most important project in North America.
And again, just to remind everybody, you still have a market cap of approximately 22 million Canadian, which is astonishing to me. What are their next steps, John?
Yeah, just some quick things. Okay, so in terms of sensitivity studies, as I mentioned, the project's IRR go down to from 50% to 20% at a vanadium price of half of where we are today. So the project really, in our view, is destined to be an operating entity within 3 years. I mean, the numbers we couldn't be more pleased with the numbers. However, there are a couple of things we can optimize. For example, we used the CapEx of 25% contingency, of which we think is a very, very conservative. If we were to lower the CapEx by 10% and then use the current vanadium price of $14 and selectively go after the higher grade starter pit first with a 10% higher vanadium grade than what's currently used in the model. Gerardo, it is a plausible scenario that the IRR could approach triple digit. Wow. So what that means is we are looking at a 12 months payback.
Wow.
Which is really quite unheard of as I mentioned, in my 18 years of doing business. You mentioned about market cap of 20 million. I just want to share a bit of share with you the landscape of the current vanadium mining sector. And there is only one vanadium producer listed in the North American Stock Exchange. The company's name is Largo. I might have mentioned it before, but certainly if I didn't, in one of my articles at Seeking Alphas, I talked about it before, and I recommended owning the stock, and I was a shareholder. Largo in 2017 was in the red because vanadium price was $4 to $10 range. And early 2017 was on the verge of bankruptcy, where it carries more debt than equity. Right. Had $300 million of debt. Last quarter, in the first quarter of 2018, Gerardo, Largo made $63 million from the operating mine operating in Brazil. 63 million in one quarter. The market cap, the enterprise value of the company went from $200 million, now it's trading at $1.2 billion.
Wow.
Now, if you look at the production of Largo, which is 20 million pounds a year, and measure that against the proposed forecasted production Gibellini, which is just under 10 million pounds. So you're looking at this as a mini Largo. It's entirely, one can clearly or plausibly make the case that if Gibellini were to be in production today, we're looking at an enterprise value should be half of Largo, a baby Largo, of $600 million. So there's your upside from 20 million to 600 million. And this is a situation, Gerardo, where you're looking at the ripple effect. I think every time when you have a bull market in the mining space and with a surging underlying commodity price, a metal price, you're going to see the benefit of that money coming into producer first, because people understand dividend, they understand cash flow. So as these companies price stabilize, as Largo sort of plateaued in whatever the valuation that is, you're going to see that money trickle down to the developers and eventually to the junior. So therefore, we believe that we're absolutely, as I mentioned to you before, there's only two stories we believe are legitimate. And one is Largo and the other one is Prophecy. And I think it's only a matter of time. I really do. That the insiders buying the stock. Largo has more than quadrupled since we first talked 6 months ago, and Prophecy is barely only beginning to move. So I think it's only a matter of time. I mean, you're looking at a big valuation, upside from $20 million market cap to 600 million, which is what we believe it will be 3 years from now once we go into production. In the news release in the PEA, which we announced yesterday, we traded over $200,000. The stock was at about 10%. Typically, Gerardo, for nowadays, for a mine from permitting, from receipt of the permit and the capital to building a vanadium mine into operation, it takes about 3 to 5 years, minimum 5 years. So therefore, we don't anticipate any new vanadium supply coming on stream. And China is practicing supply side economics and places a lot of environmental restrictions in any expansion of vanadium and steel production. So therefore, we don't see any new supply coming on stream, regardless of what vanadium price. It's just not going to stimulate new demand, new supply coming on stream. The time to market is a 3 to 5 year window. We see Gibellini is the only project that we are aware of that's capable of meeting this additional supply demand within the 36 time window. And then on the other side, if you look at the demand side, you have the rebar industry, which is traditional steel reinforcement bars. China just upgraded the vanadium intensity in order to make their building more rigid. That's not going to go away. And if you look at the aerospace industry, more people are flying, and vanadium is required for every single engine that General Electric and Boeing makes, and for the airplane. Right. So that's not going to go away. And then if you look at third, but rapidly growing market sector for vanadium is the redox battery to complement the renewable energies that we talked about it. There's a 70-fold increase in renewable jet power generation in the last decade. That's not going to go away. So therefore, vanadium is what we call the new age metal, or it's called Robert Freeland called the legendary billionaire mining investor, call it a miracle metal. We see demand coming from all dimensions for vanadium growing, high single digit, double digit for the next decade, if not more. You have 1 billion people moving into urban centers in the next 13 years. Where are they going to live, Gerardo? Right. You're going to see building go taller, and it's equivalent of 100 times the size of New York cities they got to build. So we see across the board increasing demand of vanadium, yet the supply, forecasted by Bank of Montreal and a lot of reputable vanadium authorities, just not myself, we're seeing a flattened supply of vanadium, coupled with the surging demand of vanadium across all applications from traditional to high tech, which creates a perfect storm. I cannot think of a lower risk entry point for development stage projects, given that we already have a very, very clear benchmark of a producer that's in $1 billion market cap range, Gerardo.
Impressive. I mean, I think that's the only word to use. The numbers are impressive. The jurisdiction, obviously, in Nevada is absolutely phenomenal. And we know geopolitically how important it's becoming to be in safe jurisdictions. And again, I can't think of a better place than Nevada to develop this mine. John, it's been insightful as always. Is there anything else that you'd like to add?
Well, Gerardo, in terms of next step, right? So why are we going to take it to the finish line? The company now, in the last 6 months, has achieved many significant milestones. We assembled an all-star team with experts from Barrick with 40 years experience in permitting mines and commissioning mines into production. We've consolidated the 28 square kilometers of land, of which is enough for further explorations and processing and mining and heap leaching and waste dumps. We've had partnered with a Chinese company, which is the Authority of Vanadium Processing, and have been producing vanadium through environmentally friendly hydrological process in the last 10 years. So in terms of next step is we've submitted our permit. Within 60 days, we're going to hear some feedback. And after that, working through the questions and answers, and we're going to go directly toward the last step, which is environmental impact statement. We expect to file EIS in 2019, of which the government is being mandated by Donald Trump to issue a decision, render a decision within 12 months. So our projected timeline is to have all permitting done by the end of 2020. And at that time, a construction decision will be issued. And the construction will take about 12 months. So in parallel to this permitting process, we're going at engineering, procurement, construction management, which in simple terms, Gerardo, we're issuing a tender contract, right? Who's going to build this project for us, how long it's going to take, and how much it's going to cost. Right. So it's going to be a turnkey construction contract, of which we are writing the specifications right now, and it's going to go up by the end of the year. And we believe we're going to have a turnkey contract on hand by the end of 2019. So at the end of 2019, early 2020, hopefully we're going to have the permit. And we're going to have the contract on hand, and we're going to start construction, and then see the vanadium coming out of Gibellini by the end of 2021.
Well, I know that behind the scenes, you're getting a lot of interest on the financing side, and hopefully I can have you back on, John, as that develops.
Well, you know what, Gerardo? We are receiving a lot of expressions of interest from strategic investors, and we don't have issue with any financing. We don't actually envision. I mean, I think as the market cap appreciates, we're gonna raise along the way. So we're not gonna dilute ourselves 100% and raise $100 million tomorrow. But it seems to me that there's plenty of money that's available and is tracking this project very closely. I would just recommend any retail investors hearing the story just go and grab some shares in the market, because there's going to be a very limited opportunity for them to participate in private placements, which are reserved for institutional investors.
Well said, John. Thank you so much for your time.
Stay in touch. Have a great day.
Thank you.